just like the last video, I'm going to keep this super simple. Why? Because I learned that if I keep it simple, it's easy for me to remember and it's easy for me to do. And so I want you to be able to remember this and also do it. So here are the 2 candlestick and trading patterns that I look at when I'm trading. Number 1, resistance breaks, and number 2, doji candles at key levels. So let's break down each one of those. Resistance levels is when you have a high and it gets broken. So we see here, this was a previous high. So let's see if we can draw a trend line at that level, just like that. So you can see here, this high was a previously established high. We went up to it and then we pulled back. This is a high. Then what we did is we broke above it. And you can see here, when we broke above it, we took off. Resistance breaks are one of my favorite things to trade because they're easy. Everybody watches them, and when every trader watches something, it tends to happen. So resistance breaks are very important, and we can see it play out all the way to the downside. So you can see here was a resistance level and it broke out and went up high. Here was a resistance level. Here was a resistance level. We broke out above. Here was a resistance level. You can see here, resistance, resisted once, resisted again, broke, and then went up really well. So how do I pinpoint the best time to get into trades when, or I should say long trades, when a resistance level breaks? So that's number 1. Numero dos is going to be doji candles at key levels. What does that mean? For somebody who's never been trading before, you're like, I don't know what a doji candle is. I don't know what a key level is. All right, let's explain both of those concepts. A doji candle is a candle that has a small body and a long wick. So let's find some examples here. Here's a doji candle, small body. You can see how the green, the filled in green part is small, and then the candles or the wicks are wide. Here's another doji candle, smaller body, longer wicks. Doji candle, doji candle, doji candle, doji candle, small body, long wicks. Now you're like, Austin, how do you trade these? There's so many of them. That's why I said a doji candle at a key level. What in the world is a key level? A key level is either a previous support and resistance level, or it's a whole number level at an all-time high. What does that mean? Okay, as we discussed, this was a resistance level. Why? Because it previously topped out here. So that is a resistance point. So we draw at the resistance. Oops, accidentally clicked too soon. Resistance. And if we get up close to this level, and on this level a doji forms, that's a strong sign. We're going to pull back, right? If we have a support level, let's see, we can draw out some support levels. You can see we have a support level here, around here from this support. Then we had a support level here. If a doji candle forms anywhere near this white line, that's indicative that the market wants to bounce. So we're not trading doji candles in the middle of these levels like this. This is not where we trade dojis. We trade them at key levels. And this is when people say, well, Austin, the key levels no longer exist when you're making all-time high levels, right? We can see here, we can draw a resistance level, support level, resistance level, support level, resistance, support. And when we draw these, if a doji happens at those levels, it's going to reverse wherever it came from. Most likely, it has a high chance of doing that. But when we're at an all-time high, when we're making new highs, we target key whole number levels, which is AKA the ones you see on the side. 485, 490, 495, 500. Why? Because other people don't know where the resistance should be either. There is no prior resistance. They don't know where it should be. So what do? They look at the right side of this price column. They go 495. That looks like a good number. That's where I'm going to sell my stock. Or 500. That looks like a strong level. I'm going to sell my stock when it gets there. And I know this sounds crazy thinking, but if you think back to your beginner trading, you thought the same thing. 500. Ooh, that seems strong. I'm going to sell my stock when it gets there and take a profit. And guess what? That's what millions of other traders are thinking too. So that's how it happens. So these key levels, 495, 490, 500, 485, these levels, if a doji candle forms at that level, coming straight up, forms a doji candle, I can tell you for sure I'm going to be short, at least for a day or two for that small pullback, right? So doji candles at key whole number levels. because that's what the market follows. All right, guys, those are my two favorite charting and candlestick patterns. Sorry, I can't talk sometimes. And I hope you enjoyed it. Please let me know in the community if you enjoyed the technical analysis video. If you want my chart, which includes this indicator, I think, in HMI. If not, it should populate this. I don't know. I'm not too sure how TradingView sharing charts works. But in the next course or in the next document, you can click on this and you should get my TradingView chart. All right, guys. See you later.